Hey guys, what's up? So I'm just going to be doing the trend line video. Then I'm going to be doing the stop loss and take profit, then the time frame. And just know that I did everything in just one day, so I might even re-record some of the videos because I know that the quality is fucked up and some of the things, the way that I'm saying them, a bit fucked up. But I'm going to be opening the one-on-one session. So everyone is going to get the one-on-one session. Ask any question, going to explain those things in the one-on-one sessions. So when you get to the trend lines, we have a couple of type of trend lines that you can be looking at. So we have a reversal, a trend line, and we have a continuation trend line. So a continuation trend line is when the market, let's say the storyline is bullish, say the storyline is bullish and you see a trend line like this, just to the upside like this, just know that this is a what, this is a bullish, a continuation trend line. Then when you see the market going to the downside, so let me just do like this. So if you see the market going to the downside like this, a trend line that you're going to identify just like this is going to be a continuation trend line. Then a trend line that you're going to identify just like this when the market is going to what? When the market is pushing to the downside, that's going to be a reversal trend line, but it depends on the storyline that is being provided into the market. So now the first one that you're going to be looking at is this one right here. You will see the market giving you something like this. So basically what you want to see, you basically want to see two engulfing candlesticks. So if you see like two engulfing candlesticks right here, engulfing again right here, then you can do what? You can actually start taking your bias to the upside. So it's going to be something like this. Go to your line chart, identify it on the line chart like this. And on the budget right here on the candlestick chart is what? It's engulfing candlesticks right here. So with that one, you know that you have identified an SNR level, the one that is going to be closest to the trend line. This is the one that's going to give you a higher probability entry or a high probability setup. Same thing applies when you get to, so when you get to this, let's just look at this one, but this one is a bit different though. I don't see the market, didn't see the market reacting from it, just like this. I saw what? I saw uh, this line here. So as you can see, what do we have? We do have this trend line. And as you can see, we do have this trend line right here. We see where the market reacted from. So the one that is the SNR level that is close in proximity is the one that's going to give you a reaction. That is close in proximity right here. That's the one that's going to give you a reaction. Also, depending on the storyline, is the reversal or a continuation trend line. Then sometimes you get to a point where you see something like what? You see something like this right here. As you can see, supposed to see some reactions occurring, but you see where the market decided to react from. So here we have our first touch, second touch. Sometimes the market might even break to the upside, but see what the market did right here. It tapped right here. It was at this point right here. Then the market started selling to the downside. So the trend lines are valid. So you're going to be looking for the first touch, second touch, third touch. Third touch, you might see a fake out, but you want to see what? You want to see the third touch occurring, giving us a reaction that's going to be aligning with the SNR level. Then after the third touch, there's a probability that the market might not even respect a trend line. So it's not even needed anymore. So you might even like just leave it out. Then here again, here engulfing candlesticks. Then you see that right here, what do we have? Okay, this is the trend line. So you see that here, it didn't have like a good reaction occurring at this point, but we had a reaction occurring right here. This is the trend line. This is the SNR level. This is the SNR level. So from my side, it's not that important. I don't care about it because I do have like my algo trading what my algo trading setups, so they are going to filter out these levels for me. So you use these trend lines to filter out levels that might not even give you a reaction. So we are looking at the what? We are looking at the continuation trend line, and when it's broken like this, obviously it's a reversal. What? It's a reversal trend line. So you want to see the market giving you reactions like that. So you can see that right here at this point. So let me just show you some things. Just trying to find an example. So a continuation trend line is very good when you have like the engulfing, when you have the engulfing candles creating the point, the first point and the second point. So basically any trend line, let me just say, any trend line that is going to identify if it has an engulfing, if it has like at least like two engulfing, sometimes you might see like one engulfing, but if it has like two engulfing like this, when you connect it from here to here, you have two engulfing candlesticks. And so you see engulfing candlestick, and you see the type of engulfing that I'm showing you. The market don't care if the market closes above, but as long as the market closes above this close right here, this open right here, I mean, so if the market closes above this open right here, this is an engulfing. Then again here, even though the market did not close above this candlestick, we can still consider it as an engulfing. So understand the difference between this engulfing of the candle. I know you know this one that I taught you, but there's this one right here now. When the market just closes above right here, this is also an engulfing too. And especially when you see areas like this, and SNR levels that are created from engulfing, they are very, very good. And trend lines that are created from engulfing, like any point from an engulfing, just know that is a high probability what is high probability zone, or a high probability trend line, or high probability SNR level. So as you can see here, we have the first touch, we have the second touch. So we're waiting to see the market tap what? The tap this area right here. As we're waiting to see the market tap this area right here, what are we looking for? We're going to be identifying the one that is close in proximity right here, close in proximity with the what? With the level where the market is going to. So for example, if the mid right here is good, if the mid at this point right here is good, then identify this point like just like this right here. The mid right here, as you can see, the market did not touch the trend line. So basically what you're waiting to see is waiting to see the market tap the trend line and tap the SNR level. Then that's when you're going to see a high probability momentum occurring in the market. That's when you see a high probability move occurring in the market. And this is also important, and this is also good if you're going to be identifying levels like this. Let's say you would have identified that, okay, the storyline is bullish right here. The storyline is bullish. So as we have a storyline that is bullish, we are targeting maybe something that is right here, targeting something that is right here or right there. Let's say maybe you're looking for buy opportunities. I'm not even looking at all of the confluences, but if you're going to be looking for something like this, so you see that here in the 4-hour time frame, this is a sweep of a higher right here. This is going to be your what? This is going to be your inducement right here. This is going to be your inducement that is just right here. So you go to your what? You go to your daily time frame. Then when you get to your daily time frame, you identify your levels. So levels, you know that this one is going to give us a reaction. As you can see, this one is going to give us a reaction. This one will probably give us a reaction. But now, which one is going to be a probability area that you're going to be looking at? Then you're going to take your trend line just like this. If you do have a trend line, just like this, and be like, okay, the one that is going to actually the market, the market taps this trend line, and then the SNR level that is going to be close in proximity is the one that's going to actually give us the reaction. So if the market taps here, you know that you want to see some reactions occurring. So you can even place your buys from here to the upside, reaching for the high as a target, reaching for that high as a target right there. I'm reaching for that high as a target. So that's how you use your trend line. And also sometimes you will see the market giving you something like this right here. First touch, second touch. On the third touch, you want to be taking your trade. So as you can see, first touch, second touch, and the third touch. The one that is close in proximity right here is just that. That's just this one right here. But as you can see, there were no engulfing candles. So when it has an engulfing candle, just know that it's going to be a high probability SNR level. So you can use it to identify strong SNR level right there. So another example is just, let's look for another example. So as you can see, we have the first touch right here, we have the second touch right here. So most definitely you will see some reactions occurring on the third touch. And the third touch, identify the SNR level that is close in proximity. As you can see, it does occur that the market is going to respect these ones, even though they do not have like engulfing candlesticks. Even though they do not have like engulfing candlesticks, just know that there is a high probability that the market is not going to respect them. So you can just use it. You can just use it as a confluence, but be aware that sometimes the market might not even react from them because they do not have like the engulfing candlesticks. Then again, just right here. So this one had some engulfing candlesticks. So something like this. As you can see, we have this engulfing candlestick. We have the trend line. Then here, we can use this point right here. As the market taps this trend line, as the market taps this trend line, identify the SNR level that is close in proximity or here. So as you can see, just right here, let me show you. So it was right here. The market taps the trend line, right? So the market taps the trend line, then you see close in proximity, then you see the market buying from them. Then again here, you can see that there is a trend line right here. There's a trend line right here. Sometimes the market might even react from a trend line just like this from here far away. But now from my side, I don't want that. I don't want my chart to be clumsy. So that's why I would just even choose the one that I just closed right here, or something like this too. Um, something like this too. It taps close in proximity. Then here you can use this one to take your buys or even wait for some reactions right there. So you can see it works very well, neat and correct. And then this other trend line that's going to be something like this. Just remember we talked about the one that has a fake out. This one that has a fake out. It occurs, but I don't like it because it's very subjective. From my side, I try by all means to take out anything that is too subjective. Because here, if you have something like this one right here, then now you should identify all of these levels that were created. For example, right here, engulfing, you see a fake out. So which means that you should be identifying the trend lines on the side. So you see that it's a bit fucked up. So that's why I don't consider the one that is a fake out. And the other one, the other type is just going to be something like this. Let's say this candlestick wasn't engulfing right here. This candlestick wasn't engulfing. Then you can even identify something like this. Then close in proximity, you will see some reactions. If this candlestick wasn't engulfing, problem is I don't see this example right now. But now I think I have seen it right here. Here is it. So engulfing candlestick to the downside, engulfing candlestick to the upside. So you can see that here we have this trend line. So here we have this trend line. And here we do have this trend line right here. So any area that is going to be close in proximity right here, you can use it to do what? To take some buys to the upside. You can use it to take some buys to the upside. So I guess it's very clear. It's very clear. So if you do have any questions, you know what to do, you can ask. So as I told you, the market might even respect trend lines like what? The market might even respect trend lines that do not have like the, let's see if this one fits in the criteria. So trend lines that did not have like engulfing. As you can see, there was no engulfing right here. There was only one engulfing right there. But at least, as I told you, at least one engulfing, then you can use that trend line. There is a probability that the market is going to give you a reaction with that trend line, but highest probability, two engulfings. Anyway, any form or any form or way that we can use to connect two engulfing candlesticks that have not been tapped and so forth, just know that is a trend line. The simplest way that I can explain it. Something like this, two trend lines, two engulfing candlesticks right here, then you'll see some reactions. So something like um, I haven't actually looked at it that much, but there's an indicator called engulfing candlesticks. So you can just use that indicator and just use that indicator to identify to easily identify your trend lines if you want like the higher probability trend lines and so forth. So you can just say, for example, something like this. um, let's go to the weekly time frame. Weekly time frame, do you see any examples? So there's this one right here, two engulfing right here, two engulfing candlesticks that had a fake out. As you can see, the market tapped this point right here. We have an SNR level. We see sellers stepping in. Then again, something like this. So do you see any reactions right here? Trend line like this. SNR level that is close in proximity, which was this one right here, even though the market did not actually even give us some good bias, because here it closed below right here, so which means that this SNR level was invalid until we created another SNR level right here. This is when this other one was valid. So you can just use this indicator to identify those engulfing candlesticks. Then you can just do like this. Right here we have an engulfing, and the engulfing here in the chart is going to give you somewhat, it's going to give you some bands right here. It's going to give you a V or an A. Then once you see that, identify that engulfing just like this, and just know that, okay, there's a possibility that when the market reaches maybe at this point right here, you might even see some sell reactions. You might even see some sell reactions. And also you can use this to even establish a storyline and identify areas that might even give you high probability to even change the storyline or something like that. So it's very simple and straightforward. Simple and straightforward. Let's just look at another example. So engulfing, okay. So we do have an what? An engulfing candle right here, and we do have an engulfing. So something like this. You see, I couldn't even identify this one, this trend line. So you'll see if the market reaches for that point. So it has to tap it, and we look for the price. But as you can see, this one is invalid for now, right there. Then right here now we see that we have what? We have like these two engulfing candlesticks right here. We do like this line chart. We identify this um, just like this. Then we know that close in proximity, which level is close in proximity right here, is this one, as you can see. So you know that there might be a high chance that the market might even give you some buy reactions at that point. Then right here is another example. So we had what? We had a bearish engulfing, now we have a bullish engulfing. So we can take this point right here and this one, connect it like this. We look at the trend line, close in proximity. Which one can you see? You can see that this one, this level right here is close in proximity. So you will see some buy reactions occurring at that point right here, close in proximity. As to tap, then reach an SNR level. So you can just identify the one that is very near to the SNR, near to the trend line. So don't base your analysis on the trend line. Just look at the SNR levels and use this to identify more confluences. You can use this to identify more confluences. So let's just look for some other examples, and you can see that sometimes it's going to be fucked up. Just look at this, bro. Like this is a lot. This is a lot of trend lines that you could have identified. So right here, trend line like this. Then as you can see, identify the ones that are close in proximity and use the confluences that we talked about previously. And you can even say that, okay, now this is the one that's going to give me some cells, and I know and you understand why we are taking this one right here. So you can just use it in that manner. You can just use it in that manner. So same thing applies to engulfing candlesticks. It's going to create a high probability what trend line. So it has to tap close in proximity. As you can see, we tapped um this trend line, but we don't see the market reaching for the one that is close in proximity right here, the SNR level that is close in proximity. So which is what, cancel the trend line. So you're not going, actually not cancel the trend line, not going to be looking at this level until you have like more confluences, or until you have like a specific reasons why you're going to be looking for um cells right here. Then again, right here, two engulfing candlesticks, then something like this. Then you could have identified the one that is close in proximity, but as you can see, there is nothing right here. There is nothing right here. There's nothing right here above. There's only this one. But basically from my side, I just want to see it at least tap the trend line, then reach for an SNR level just above. That's the one that I like. That's the one that I prefer. Then something like this. Here we have two engulfing candlesticks right here. So we're going to be using that trend line. You see, this one is a bit fucked up because there's something right here. So we cannot draw it from here. Cannot draw it from here. So you have to look for another trend line. So this one is a trend line right here. Two engulfing candlesticks. Two engulfing candlesticks. So it tells us that the one that is close in proximity is the one that's going to give us some reactions. So the closest SNR level right here is just this one right here that is close in proximity. So as you can see, 5 reactions occurring. Then again here, trend line, close in proximity. Then you see the market did not even tap it. So it was the first touch, second touch, a breakout right here to the upside. So with this breakout, then you can even start like wait for the market to reach this point. Then you can even start looking for your buy opportunities. There are many ways that you can use this. There are many ways you can use this. So I'm just going to explain one way you could have, or you can use this trend line. You can use this trend line. So if you reach an SNR level, you can even look for breakout structures and so forth. Then look for a trend line, you look for a setup. Or you can use this to even identify that, okay, here we might even be taking some cells, right here. So as we have reached what, the key level to the upside right here, the market has tapped that key level, so definitely going to see some reactions occurring. Then again here, just because the storyline is still bearish, you can see that here this is going to be your sell level, so reaction from there to the upside. So you could have actually used some confluences right here, then you look for your cells. Okay, you could have looked for your cells. So it's very simple and straightforward. If you don't understand it, I'm just going to explain it on the what if you request the one-on-one sessions, but I know it's not that important. That's why I'm not going in depth with it. It's not that very important. You can use it to find some good confluences, but it's not that significant, it's not that important. So we're done with this one. Let me just look at, okay, so we're going to be looking at the take profit and stop loss in the next video.